Well, earlier in that House committee hearing, Congressman Patrick McHenry asked if the banks would face challenges in the event of a no vote for that Brexit extension. And here's what they had to say.
I'd agree it's a challenge. The industry spent a lot of time preparing for it, and I also agree that it's not entirely certain exactly what will happen, but it is a challenge.
We've spent a great deal of time preparing for it on our own behalf and for our clients. I think it will be a challenge for the world economy.
Joining us now, Cornell Capital Managing Director Ann Berrt. And Ann, some of the CEOs also said it would not be a systemic risk necessarily if and when it happens, but that the challenge was a word that many of them used. Is that right, do you think? Do you think it could spiral into something larger than just a challenge?
I don't think so. I think if you look at the way in which the financial regulators worldwide have really stepped up to prepare for Brexit, but also a number of other sort of geopolitical macro challenges, there's been a lot of work done to try to put safeguards in place. The Bank of England, for example, has spent a long time testing to make sure there was sufficient liquidity in the UK financial system to withstand a no Brexit scenario. So I think the cushion's probably there.
Is the damage, though, done for the UK no matter the outcome, whether it's hard Brexit or soft Brexit or no Brexit at all? We've seen companies relocate outside of the UK despite it when it's the fifth largest economy in the world.
I think certainly if we could sort of delineate the no Brexit at all and then the Brexit in whatever form it takes, I think there is no question the Treasury's come out, the Bank of England's come out, the IMF's come out and said whatever form a Brexit takes, it's a worse outcome for the British economy than not leaving the EU. I think if no Brexit happens, whether there's a second referendum, fingers crossed, whether Article 50 is revoked unilaterally, I think that is likely to lead to a better long-term outcome for the UK economy. But in the interim, the credibility of the stability of the British landscape has really been shaken up. And I think there is going to be a question around longer-term investment, at least in the near term.
And so when you're looking at investment opportunities, whether it be in the UK or on the continent, is there anything that's attractive right now, or are you still sort of in a wait-and-see mode?
I think most of the market is still very much in a wait-and-see mode. I think there are some staples that are likely to be fine no matter what, right? So in the food, for example, certain consumer staples, you'd imagine that people need to eat no matter what happens in the political outcome, and the question becomes what does the trade do to the supply chain to impact it? But I think wait-and-see is really the modus operandum at the moment.
You mentioned the possibility of no Brexit. I mean, what are the odds of that, and what kind of scenario would bring that about?
It's interesting. I think no one knows, and I couldn't claim to know, but I think the kinds of scenarios that could bring it about are if we do see this extension for a full extra year, the fractions that you've seen within the Conservative Party, which is the reigning party right now, between Labour and the Conservative Party, I think the calls for a new general election will get louder and louder and louder. I think Theresa May's credibility has been completely put to the side. And, you know, if there truly is a regime change, I think the question of whether a second referendum happens could come back on the table.
You know, on a broader subject, though, we heard from Mario Draghi this morning. The ECB is concerned about the slowdown in Europe. We've got Germany on the precipice of recession. Investors have got to be looking not just only at the Brexit situation, but what's happening in Europe and thinking, where should I put my money? And it doesn't sound as if right now Europe is the place to be.
I think it's a little bit of wait and see. I think on a global scale, the IMF coming out and saying that the global economy is going to slow down versus where it was last year, it's a slowdown relative to real peaks. Right, so if we look at the phase that's coming ahead and the sort of doomsday projections we're starting to hear, it still points to higher growth over a much longer cycle than we've seen in the past. But look, I agree. I think the fact Italy's been in a technical recession since December, Germany being on the cusp, and now with the new tariffs that the US is threatening to add to a very complex European landscape, I do think there is real complexity for investment decisions there.
And just very quickly, because of all that's going on in the UK and in Europe, on a relative basis, does that then make the US look more attractive even than it otherwise would be as an investment destination? I think so, absolutely. I think the US, even in a vacuum, take aside the comparative opportunity, is still doing extraordinarily well. If you look at the employment figures, if you look at the levels of business confidence, even as folks talk about, is there a slowdown coming? Again, it's still this very long runway off a very high peak with no immediate catalyst pointing towards, a step function in that growth. So I think the US still looks very attractive. All right, Ann, good to see you. Thanks for coming in. Ann Berrt of Cornell Capital. She's the managing director there.